Good morning. This is Vince Lanci. It is Friday, 8:04 by my clock, and a well-deserved Friday it is after a harrowing week for active traders. I'm referring, of course, to traders that are in markets that move. Gold just doesn't give us the active trading that we'd like to lately. And anyone who's listening who thinks it's really bad to be self-pitying about gold. It's not. You have to have a sense of humor when you're in love with a market that's truly money, that's truly a precious store of value forever, and is truly an inert pet rock that does more as a doorstop than anything else until somebody really needs it. So let's move forward. I am on the road. I'm at a technological disadvantage. And that's something I could say even when I have technology in front of me. Um, Still using a phone. So you could say that we're very homespun here. You're looking currently at the Opportunistic Traders chat room. That's where alerts and ongoing commentary are put in, not just by me, but by the other experts, which is a word that other people call them. People don't call themselves experts. These are people that really know what they're talking about. I'm happy to be part of that group. And Larry Benedict is happy to be at the hub of the group. We're happy to have him at the hub and be on that team. Very quickly, it is Friday. I say this as a plug, and I say this because there's value there. I don't endorse what I don't like. I don't endorse what I like. For example, my charting package. I'm not going to brag about it for this thing. But there are 4 chat rooms. You can't see them on a mobile, but it's commodities and energy, equities, FX, and bonds, and news. So basically, if you're a Twitter person, um, and you like to organize your Twitter for news headlines factually, there's a column for that. And I'll click on that right now. In fact, news Q&A is what Tracy's throwing in some charts. Green are people that are offering advice and hand holding and trading levels. And gray are subscribers who aren't just subscribers. These aren't people who who are what's a call, what's a put. Not that there's anything wrong with that. We're here to educate people at every level. But these are people that add value as well. Guys like John Hassinger, guys like Gabe, who are constantly tape watching and throwing them information. Guys like Mike Strong. And I'm a gold guy, and if you're a gold person, you're listening because you're a gold person, and you're not paying attention to the FX market, pay attention to it. I know a lot about it because I had to after getting hit over the head with dollar pairings for years. But subscribers like John and Gabe and Mike and new subscriber Ama AHMA. I won't say his name, but he's among our growing overseas population. Apparently, there's a lack of high-end help for traders that want a little bit of an edge, and that's what we give. But that's what you're looking at right now. Okay, there's that, and then the bottom half on the mobile version, these are trades. You can see yesterday. You see what I did yesterday. I had nothing in gold. I sold the SPY, which is the equity version of the ES or the S&P. Sold it short on my system, and I got timed out. So I don't trade just gold. I trade what the system and my gut and inputs tell me, and I'll lose a little bit less than 50% of the time. My MO is I risk 1 to make 2. So if I'm 50-50, I should be making money. Tom McEntee, maybe he doesn't want his trades divulged to the public. That's not because they're bad. It's because he's a pro and he really knows options. Let's get to gold, because yesterday, Teenage Wasteland Revisited, that title, just getting it out of the way. You'll hear many times in the chat room and broadcast with Larry that gold hates the teens, something I learned from an old hand. For some reason, gold hates the teens. It'll be repelled by it, almost like a negative gamma range, and we are entering the teens now. So I may read quickly, I may skim through. You have plenty of time to review this. on your own time. This is a post just put up in commodities. Okay, yesterday, nothing particular exciting happened in gold pricing, despite PGM and silver weakness. I'm an incredible wordsmith. Futures seem to ignore U.S. dollar movement. I noted that in the chat room at 2 p.m. Eastern Time when the Fed released their notes. Gold spiked for no particular reason. That was short-lived. Somebody got stopped out or stopped in. The Fed notes were not bullish gold. We denoted. We viewed this. Did you? All right. All right. Well, let me just do this. No video. Uh, Hold on. Oh, look at that. My recording stopped. Okay. I'm going to start it again. I might have hit a button. I think when I changed screens, possibly did something. Oh, look at that. Okay. Here we go.
I think it was you were patting yourself on the back about your technology skills, and then boom.
I know. It's you can't win. Okay. How about now? Okay, good. All right, folks. Sorry about the video mess there. I spilled a beer on the server. I mean, coffee. Forget it. Maybe beer if you're overseas. Okay. So you heard me say yesterday the market finished softer. This is significant. The market finished softer as the US dollar firmed up in line with what we handicapped in the chat room. Drill down, pal, math, and QT. Drill down is a phrase I'm going to be using if when I have time, but not time to write, but time. This will be for Q&A in the future, as well as some comments that are not written down. Point is this, I've said this several times, Powell is not yelling. When data comes out confirming his thesis or his bias, he will say, "See, I told you so," in more academic words, and statements will say, "We're going to keep doing what we're doing." And that's what happened yesterday. And that leads to a stronger dollar. That leads to not bullishness for stocks. And it also leads to, you would think, a weaker gold market. Um, so far today. You can read that on your own, but this is actually important. Starting around 11 p.m. Eastern Time, U.S. First diver. What is that? First dive. First dive. I don't know. First hour. Okay. First. You know what? Uh, I hate spell check or spell correct. Gold broke VBS levels, indicating an increased momentum lower. This was not a tradable signal because it was a daily signal. It won't be a tradable signal until the day's over. It was not a tradable signal to open position by our risk reward parameters, but was textbook get out if you are long and or I'm bullish, but I think I'll wait a bit to buy. The market stabilized in London when London liquidity showed up between 12 and 4 a.m. That's not to say that the buyer came back, but it did stabilize. I think you got some people in Europe and London that are buying a little bit of gold because of chronic, ongoing problems. I mean, if you're nervous about Brexit and you're getting taking your money out of the British pound and you're putting in euro, and then you're looking at Italy and you're taking it out of the euro, and you're like, oh, we'll put in a dollar, and we'll put a penny out of every dollar we invest in gold. And I think you're getting some regional support from that. All right. Apologize for the chart sizing. That's my fault. The blog, the posting model has a default, and I need to change that. So there's your markets as of this writing, complete with the fact that I use Sprint. That is not an endorsement. In fact, they should pay me to tell people to use it because I'm telling you right now, don't use Sprint if you're in the U.S. and East Coast. All right, dollar index is stronger following through on yesterday's late gains. Gold futures are down almost 0.5% in the teens. Gold spot, this is important. I put that up there. If you don't know why, you'll learn as time goes on. Silver futures lower almost a percentage point. Surprise. So silver and the PGMs and copper are performing as if they were economic metals, which they are, and gold is performing as a financial, as a monetary metal that is suffering because of strong dollar. Dollar's only up a little bit today, but bear in mind settlements changed. The dollar was up uh, 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 pretty decently yesterday after touching as low as 95.70, 95.80 area. And again, the DX is primarily or predominantly comprised of the euro. That is from Mike Aronovitz, who is an FX expert in his own right and just basically helps me survive. That big white space there, that's for you to draw around in or give to your kids to color. Data on deck today, you can read that, but basically you got PPI, Um, and you have some commentary. You got some Fed people speaking today. That's a hat tip to Mark Chandler, who is really, really a guy that I do pride myself on discovering people who write without the waffle, write without the nonsense, and they end up getting their own blogs on Zero Hedge, and I sulk in a corner. But anyway, this is good stuff. I like to read his stuff, especially when he talks about Asian currencies tied to China. Yesterday's trades, nothing particular stood out, and nothing was done on our own algo brown box. I say brown box because it's not fully automated. It's not subjective, but you have to be on the spot to press the button. Technical traders would likely have been biased bearish. I was biased bearish, but I don't trade technically usually. Uh, but below 1220 on my map, that was an area we broke out above. You got to be careful. And again, we're in teams. Other money, facetiously speaking, that would be currencies, the yuan, onshore and offshore. I think this is the fourth or fifth day in a row that China did nothing in terms of what's the word? Uh, uh, Involving themselves in the market. Not reinvigorating, whatever. They were inactive. Let's put it that way. The yen, not much of a mover there, but remember the yen is very strongly correlated with U.S. stocks. The euro is weaker still. The British pound is weaker, but when you look at the weekly charts, I put at the end of the week, I'm going to be putting up weekly charts on these currencies. I think it's important. Canadian dollar, I don't pay much attention to, but that would be foolish considering the whole NAFTA 2.0 thing going on. Aussie dollar, 72.44, the ruble, and the Turkish lira. That's my coffee. Is what it is. The crisis is over. They're just going to die a slow, painful economic death. Very quickly, you can look. I'm going to make a statement per the offshore yuan. We're looking at weekly charts here. Look at that run up starting from May on a weekly basis. That's when the trade war started. And now we're looking at China not doing much currency wise. The euro is looking like CRAP. But it has, if you think about it, it's holding up pretty well considering the chronic problems with Italy. And I put up the British pound because it actually, you could make the argument that the British pound is looking a little bit better than the euro this week based on where it's trading, and that could be a comment on the fact that you know, uh, Britain might be fine on their own. If there's other people to trade with. We're talking about Brits here. We're not talking about continentals. Uh, that's my Anglophile showing. Aussie dollar, nothing particularly compelling for me to say, except that you do have some serious trend lines on a weekly basis going down. But it's a strong week. It looks like it negates what the downtrend was. The Japanese yen, again, kind of looks like the stock market. Outside markets currently trading. U.S. 10-year yields are down. I think that puts it at 98 spot. Shanghai Composite bourses across the board are down. Bourse is an old school word for markets and usually refers to equity. So the Nikkei, so Asia's down. Europe is down, and the U.S. is starting out weaker. Exactly how much weaker, I don't know, but you have to look at the adjustment to settlement. Okay, reading the tape, you can read that on your own. Uh, but I will say this: the drill down, PAL put. The PAL put is rumored to be, as opposed to the Yellen put, which is every time someone sheds a tear. The PAL put is rumored to be 10 to 15% below where we are now. So that's not a happy thing for investors. I'm talking about the mindless type of investor that just puts his money in and has been right. I'm not going to, mindless is good. I mean, it works for Zen Buddhists, but this is a good environment, I think, for active traders. The active trading landscape is going to be good because you have a whole generation of people that have relied on a tight put or a tight stop by the rumored plunge protection team. But now you get a guy like Powell who pays attention to the numbers, God forbid, but there you have it. Technicals, more analytics. That black box there is a courtesy to Michael because that's the kind of stuff that I think his clients would be a little annoyed at not seeing. Make this a little bit bigger. I think the takeaway here very quickly is the first line, upside, sell against 1228, 1230. And downside, get short below 1213.40. He's got trend lines and he has algo systems that he uses. Today's VBS systems, I think today is a good day, and we're going to get some high quality triggers uh, on the daily signal. Okay, I put up spot and gold because I follow both because they don't necessarily give signals at the same time because they close on different hours. If you're following spot gold or you're trading futures off of a spot price, because these futures are getting close to spot, above 1234.50, below 1218.90, you have a high quality. And when I say high quality, it doesn't mean you're definitely going to win. Every trade is a 50-50 with the system, but you have a high quality, meaning tight risk one to make two situation, but it's a daily signal. That means you're going to hold it if you're right or not stopped out from 1 to 5 days. It's not an intraday signal, but if you're already bearish and you see what I see, you might want to trade it on an hourly basis. But below 1218.90 on a settlement, I get a signal that says risk one to make two. Stops and targets will be put in the chat room if something like that happens, but it won't happen until the end of the day. And this also coincides with my uh, team statement. When you move to these futures, you get a little bit different numbers. Actually, right now, it's on the radar, meaning I'm pretty sure, I'm 90% sure we're going to get a signal if we settle below 1218.90. On these daily, we are already getting a trigger that if we settle below 1221.52, it is a fact that we will get a signal. Why it's a signal? There are many reasons, but the visible signal is the Bollinger Bands are as tight as I believe they have to be, and they're now widening in opposite directions. And when that happens, you follow the middle line and which way it's going. Where your stops and where your risk reward are up to you. But I have other things. Other time frames. It's 12:21. We're going to end this in 2 minutes. Other time frames running through it. Okay, 60-minute. You had a breakdown late in the day and last night. That was last 5 or 6 hours looking mysteriously like the last 5 or 6 weeks in the euro. 240-minute, no particular help, but if you look at the trend line, you can see the wicks above, the long wicks above, not a lot of long wicks above. I bring you close to the daily for a little close up. The gold futures continuous. There's your signal, where I come up with the levels. That's for me to know and you to figure out. When you start asking questions and we open it up to that, I'm sure I will start becoming less sincere. As you can see, this is a delayed chart. This system, I'm not going to pay $100 for something I'm not even trading on. But my trading system, TT, CQG, things like that, that's a different story. Okay, the weekly is looking bad. We had a 1250, 1260 area for an orderly March higher. The week is ending bad. It is a Friday. Gold futures on a monthly basis, we had negated downside momentum and called for a bullish move 2 months ago. Last month finished in the green with a long wick, and now we're starting a month that's looking bad for the moment. So we said in August, be long with a stop out below new lows or 1189 if you were less scared. If you had bought then, you would still be long. You'd be trailing your stop up. And that stop level that you trail it up to is depending on your financial things. Learning moment. When I say learning moment, that's a reminder or a relearning moment for us. We don't really have a lot of time to go through that. But basically, if you paid attention to the ECB's closing comments yesterday, I think his name is Devani. It might have been Nowani. I don't know. But if you read that and or we wrote in the chat, we already came in with a bias that we thought that if there was any surprise coming out of the Fed, it would be strong for the dollar. And to us, it was kind of a tell that the weekends were going to cover. Mining stocks starting Monday. All right. This is someone once said about me because I am a long vol player. If you tell a kid buy a straddle because you win no matter which way the market goes, higher or lower. Heads is a rally, tails is a sell off. It's 50-50, and the coin lands on its side. So clearly, clearly, it's not always good to be a long vol. That's a self-effacing comment. I tend to be long vol, and if I'm shorted, I definitely stop myself out before the normal human being does. That's it for today. Let's go back to the markets and see where they are right now as we sign off. And we are the only market that matters is gold. Okay, so spot gold 12.15.20. We are accelerating to the downside into the US Open. I would be, if you're short already, consider buying the 1208 area or using Michael Moore's advised levels. Average daily range is under $9. Today is a Friday that has been historically a bullish day for gold, only because it negates the 4 day prior week. Get me out before the close. But gold has been holding its own despite a strong dollar. We could drop $10 for no reason if someone just pushes on a string a little bit. So there's the markets right now. Uh, the yuan, which has been and continues to be important and growing in importance for gold, is not really the reason gold's down now. I think you're looking at gold getting hammered possibly today, and maybe even worse after York closes if they are the bid that I think they are. Have a great day. Have a safe day. I'll see you in the chat, and I will see you Monday. Look for a weekend report, not necessarily on gold, but on a recap of the week. I'm Vince Lanci, 8:26 a.m. Eastern Time in the United States, and have a great one.